Top of the morning to you, and welcome to our newest episode of Capital Markets Quickie from MVP Mind Value Partners. We heard some very encouraging news last week as Pfizer and BioNTech announced that their vaccine showed very promising trial results. That, of course, powered the stock markets all over the world higher. However, the coast isn't clear yet, but the light at the end of the pandemic tunnel just got a little bit brighter. My name is Endrit Cela, coming at you from Frankfurt, Germany, Europe's financial hub and home to the ECB. Let's take a closer look at what moved the markets this week. The S&P 500 closed at a new record high, and global equities posted a second week of gains following news of progress in developing a COVID-19 vaccine. Out here in Europe, the stock market put on some very large gains, with the Euro Stoxx 50 leading the way with a positive weekly performance of 7.12%, followed by the FTSE 100 with 6.88% and the German stock index DAX 30 with 4.78%. Most of last week's performance came on Monday after Pfizer and BioNTech announced that their vaccine had 90% effectiveness in their large study. And that, of course, triggered a wave of hope and optimism that a medical solution will address the health crisis and accelerate the economic recovery. It was also interesting to see that the cyclical sectors that have been negatively impacted by the pandemic and are more sensitive to the reopening of the economy outperformed last week. Companies like Anheuser-Busch, Lufthansa, Boeing, Airbus, TUI, and the list goes on and on were the clear winners this week. And the tech giants that we've come to know and love were the clear losers this week. So we clearly saw the first sign of a sector rotation in the stock market this week. A similar rotation occurred across asset classes, with small caps and international stocks outpacing US large caps. For example, the European stock market clearly outperformed the US stock market last week. The Euro Stoxx 50, as I mentioned already, put on 7.12% last week, whereas the S&P 500 put on only 2.16%, and the Nasdaq actually ended up the week with a negative performance of minus 1.27%. So yes, the news of a vaccine sparked a rotation last week, providing a boost to pandemic slackers or losers, while pandemic leaders or winners were trailing behind. Technology growth and so-called stay-at-home stocks have been the clear outperformance since the rally started in late March. And if we take a look at the Nasdaq's performance on a year-to-date basis, we'll see that technology growth and the so-called stay-at-home stocks are still the clear winners of 2020 so far. Year-to-date performance on the Nasdaq is 36.7%, and only silver has managed to beat the Nasdaq so far with 40.54% on the year. However, vaccine hopes sparked increased confidence in the return to more normal economic conditions, driving leadership in cyclicals, value, and small cap shares. Yes, value stocks did make a little comeback this week, and this could be just the beginning of a beautiful rally, maybe even a value renaissance. I believe the rotation last week was an appropriate market reaction and something that I've been talking about for quite some time now. As the post-vaccine expansion extends in the future, I anticipate additional rotation as economically sensitive cyclical investments benefit from persistent growth. However, that doesn't mean that the rotation will be consistent or uninterrupted. It's always a good idea to balance your portfolio across many asset classes and sectors and maintain appropriate diversification that can help navigate any path ahead. And that, ladies and gentlemen, concludes today's Capital Markets Quickie. To all of you listening from every corner of the globe, I wish you all the best, and stay tuned for our next episode on Sunday, November the 22nd.